Okay, so good afternoon. Welcome. This is another episode of my webinar series. Doing something a little different today. Have the honor of having Jean Goldstein with PEO Advisory Services as my honored guest and main speaker. So I'm taking more of a MC role today than I am a presenter, although I'll give you some nuggets before we're finished. As many of you know, I am going to record this session, and in fact, it's recording as we speak, but it'll be on my illustrious YouTube channel at some point shortly thereafter. So if you have to leave early or you know somebody that wanted to attend but couldn't, they can listen to the rebroadcast. So without further ado, I'm going to introduce you to Jean Goldstein, who I know a lot of you know, but a lot of you don't probably know that she was a CFO at a good-sized PEO in her lifetime and is now doing a lot of consulting. And she's going to lead us on the accounting fraud arena, and we're going to talk about how to identify, how to avoid, and when she's finished, I'll give you a little legal tidbit, and hopefully we'll have a little time for questions. So Jean, how are you doing today?
Hi, I'm doing well. Thank you for having me. I feel like it's a podcast, right? Thank you for having me on your podcast. Hi, everyone. It's great to be here, talk a bit about accounting fraud. What Gordon has up there is a little bit about my experience, what I do with some of my clients and for some of my clients. It's not all inclusive. So if there is something that you have a need on and you don't see it represented, please feel free to reach out and let me know. So with that, let's get started.
All right, I'm going to go back to the presentation. Here we go. Okay, Jean, here we go.
Okay.
Okay.
So fraud, and the big item on the mainstream right now is NAPEO has put out a lot of information on is the fraud that comes when prospective clients become new clients, and for some reason or by some means they defraud the PEO and they take off with your funds before, usually within the first couple of payrolls. That's one that we will get into, but I wanted to talk a little bit about some other frauds as well. Some of the other types of fraud that I'm calling payroll fraud. Some other fraud is internal fraud, employee theft, and then unemployment, which has really come to light now in the age of COVID. There's been a lot of issues with unemployment fraud. So on the payroll fraud side, the way that fraud is committed is usually in the form of ACH, check fraud, or even in the case of new clients with identity theft, where a client purports they're someone who is in fact a true business, and they've stolen the identity of that person or business or both. So before we get into the new client fraud, I wanted to talk a little bit about ACH fraud as it relates to clients pulling back funds. Now, pulling back funds can happen with the new clients as well, but this particular slide refers to existing clients. So clients that you're rolling along, they're paying you just fine, and then all of a sudden they default, they pull back an ACH payment. Now, I have a lot of in my previous experience, and I have a lot of clients who, to mitigate this all together, have decided to use reverse wires, reverse draws. There's a couple of names for it. And for those of you who are not aware, a reverse wire is similar to an ACH in that you pull the funds out of the client's account, but it cannot be reversed like an ACH can. So in the case of reversing an ACH, what happens is the the client has 48 hours to pull back funds for any reason. There is no specific reason that they have to give. And then the bank has another 24 hours to, your bank has 24 hours to notify you. So that is why 3-day ACH is a very big, I'm a proponent of it. The problem that you have with 3-day ACH, collecting the funds that far in advance, have to do with maybe their existing clients who really don't want to change. It may be that the clients don't want that money taken out of their account so far in advance. And if you're competing with other PEOs that will allow the client to have maybe a 2-day ACH or even the day before ACH, it becomes difficult in sales or maybe even in retaining that client relationship. So before we move to those are some of the mitigating factors. Some of the red flags that happen when a client is coming to the point where, you know, they might pull back funds, and usually that's because they don't either they don't have the money or something is going awry on their end, maybe some fraud on their account, and that happens. But in those cases, usually the client, it's easy enough to call up the client and say, hey, you know, this returned, you need to make good on it, and you can collect by a wire transfer or some other means. But some red flags that we see are if the payroll starts to be submitted late, or the approval process seems to start to get delayed. Maybe the client isn't corresponding like they used to with the payroll person. There's a change in the funding bank, or maybe and all of these things could happen at the same time, and maybe a reduction in pay is happening. So you can see that the client's going down a road where perhaps they're going to have some problems with their funds. So how do we mitigate these circumstances? Well, we talked about the 3-day ACH. The reverse wire is another method, maybe requiring a security deposit. Again, a difficult situation in terms of, especially in these days, clients may not have those kind of funds sitting around. Train your payroll and other customer service staff to recognize some of the red flags we talked about above. You know, your payroll staff are your first line of defense, and they really need to be pulled into situations and conversations about collections of funds. And I think sometimes we don't do that because we just assume payroll processes the payroll and then accounting takes care of the funds. But a lot of these red flags and a lot of the signs, if a payroll person had some knowledge about it, they could tip off accounting and maybe mitigate the situation before it happened. And then the next two, Gordon, if you want to jump in, protection in the CSA and fees in the CSA for pullback of funds. I'm sure that if you want to jump in there, Gordon, I mean, we do put that into the CSA as well.
Yeah, you know, contract protections are obviously important. Um, you know, when things go awry, you need to know what your rights and liabilities are, as well as what duties you have to the client. And you know, with all the various requests that you get flooded with, it's inevitable that something may slip through the cracks. And so it is important to have you know, something memorialized in the CSA that'll not only protect you, but at least it'll explain to the client what, you know, what if anything you will do to protect them.
Yeah, absolutely. So the next type of fraud we're talking about here is payroll check fraud. And I hope that none of you have come against this, but I have seen it personally, and I've seen some of my clients have had this situation where a employee will get their check, they will take a picture and deposit it on their phone, and then they will go to a check cashing location. Or maybe there was a stop payment on a check, and then but the employee has the check and they go to try to cash it at a check cashing location. Some of the ways we can help that situation. In my particular PEO, what we did was we actually wrote on the face of the check that if it was brought to a check cashing company, that they would have to call our place of business and receive a a verification number, and without that number, they could not cash the check. Now, Gordon has Gordon and I have discussed this situation, and obviously state by state, the laws will differ as to whether or not it legally there's any stance with doing what I just said. However, in our case, we found that it was a deterrent. So most times we actually we didn't have to defend it. We actually had a check cashing company. It was actually Walmart call, and we said, well, what's your approval number? They didn't have it, and we said, we're not going to pay you, and it never went any further. So some other methods requiring a direct deposit, obviously that is, I have some clients that have 100% direct deposit because they're in states that will allow that, but there are some states that don't. And the other thing to think about is making sure that you have some kind of acknowledgement signed by your employees that are putting the onus on them to say, hey, listen, you can't cash this check twice. And if you do, it could be truly a mistake that you're on the hook to pay us back for that. And then one last thought is for all of these frauds to make sure that you have some kind of insurance to protect in the case that a fraudulent act happens. So then the next time kind of payroll fraud relates to prospects, and this is prospects and clients that come on, and this is those of us who get any of the NAPIO newsletters or read them. It's a big issue right now. There are tons of cases. They just keep pouring in. A lot of them recently have to do with somebody stealing the identity of the company or the owner, and then going to a PEO, setting up payroll, and then disappearing, or taking after the first pay goes through, pulling back an ACH, or some cases requiring a check cashing cards for all their employees. So I'm not going to go through all these red flags, but some of them are just things to look out for. The big one being if somebody's in that much of a rush to onboard, they have no interest in talking to their employees, or how it's going to seem this transition to a PEO. They're just, they're unwilling to meet you virtually, right? In this day and age, I would say meet you personally, but they're unwilling to get on a call to show their face. They don't have an actual mailing address. They use a PO box. A lot of their correspondence is non-corporate. They don't have a website. They don't provide census data. All of these types of things are red flags. And Gordon, you can go to the next slide, please.
You got it.
So how do we mitigate the risk? Well, let's start by verifying the company's credentials. State registrations through the Secretary of State. A lot of this stuff is public record. Some of it's you have to be a little bit investigative to get to it. Have them provide the FEIN. Student accounts are a good way to, a lot of states, if you have the client's state unemployment number, you can go in and verify that the account exists. Look at the company website. Does the company have a business address and a phone? I think some of the other things that I've heard is maybe looking at work comp. There's a way to confirm work comp actually existed.
Right.
Identity and credential checks of the business owner. We can consider requesting a security deposit for the first couple of payrolls. And that's not always a telltale sign or that doesn't always help, because they could be good for a couple of payrolls and then turn it around on you. But it could help. Requiring wire transfer before the release of the funds. Going through that census data, looking at the most recent payrolls, making sure that this is some kind of viable entity, and maybe even cross-checking the census data to what actually comes on. And then, of course, we want to train our internal staff to identify any kind of fraud as well.
Let me add one thing here, if you don't mind, Jean.
Please.
So you can call most state workers' comp bureaus, boards, whatever they call themselves, to verify whether an employer has coverage. Another thing you can do is you can use Google Maps. So even if you get a physical address, you can go look at the street view to see if it's a residence or if it looks like it's a real office building, or what the location is. That'll help you avoid a scam.
Okay, and there's some good resources. NAPEO has a payroll fraud resources. You can reach out to them if hopefully you're not, but if you are defrauded, you can check their best practices white paper or best practices paper. And then one of the things that they suggest is to alert the FBI's Internal Crimes Complaint Center, IC3 it's called, and I gave you the link for that as well.
Also, it could involve the Secret Service. Secret Service is involved in money transfers also.
Okay. So let's talk a little bit about internal fraud. This is an interesting one that happened. This is just a little story that happened at a PEO, where a payroll specialist and their contact at the client created a fictitious employee, and they set that employee up. They paid them payroll, and they split the payroll that was ultimately shared on the back end. And the way this happened was, and if you think about it, it's not very difficult. If you don't have the proper policies and procedures in place, like making sure that HR is handling I-9s, and that payroll is involved in that process. This was a smaller PEO, so the person who did the payroll did a lot of HR functions, handled a lot of HR functions as well. So ultimately, what I suggest is, if you have any idea that this might be happening, or you're a smaller PEO and you want to just do some kind of a test, you can send out what we would call an audit, a worksite employee audit, where maybe you send a list of the current employees on the payroll to someone other than the direct contact without their knowledge, and have them sign off that those employees actually exist. That's a good one. Reconciliations being performed timely to ensure that you're catching any kind of benefit issues, EDI fees with major providers, cycle your payroll specialist. That's another one. A lot of times for customer service reasons, we keep the same payroll specialist on the account, but sometimes it's good to cycle that, even if it's just for a short period of time. And then the other item that I didn't mention above was cash theft, which there's really not a lot of cash in a PEO. We don't really keep cash on hand. But if you do, just to make sure that if you have some kind of a petty cash box and it happens to be material. I know we had a lot of cash on hand when we moved buildings, and we needed to pay certain contractors cash or tips or whatever, just to make sure that that's all secure. Also, I think check cashing cards are another one that should be included here, making sure that our check cashing cards are numbered, and that there's some kind of process in place to ensure that they're not released without meeting some kind of a documentation or request. And then the last item that we wanted to talk about, I want to talk about today, was unemployment fraud. And this has come up in times of COVID more so than anything. I personally had my identity stolen. I just found out last week that it was through Geico, that Geico somehow had some kind of leak that leaked my social security number with my license. And I did in fact have somebody file an unemployment claim under my name and social security number, but using a different address, because for some reason they couldn't find my address, which makes zero sense. So it really is odd. But in any case, it's big right now. There's with COVID, there's more and more theft. I actually wrote an article for the PEO Insider on unemployment, and there's some good details on the unemployment theft that's going on right now. So we need to, we need to, as a matter of practice, be sure that we are checking our claims, be sure that we are identifying that every claim that is on our sheet that we get from the individual states is a proper claim, that we've, first of all, we should be responding to every claim, so we should know that. But in the case that we didn't, we need to make sure that the claims are accurate, not only that they're valid, but that the amounts are accurate, and that we need to then also check our SUTA rates to make sure that if there are fictitious claims or claims that are not in the correct amounts, that those are reversed and that they don't hit our claims. So we review our claim data, we do some forecasting on our rates, and one of the other things is documentation from our clients is very, very important. And I know a lot of PEOs have lost some sight of that, but it is so important. In the past 5, 7, 10 years, we haven't really had a problem with unemployment rates going up. So it hasn't been an issue. But as the rates are going to start to creep up, we need to make sure that we're looking at these claims consistently. So, and then reporting actions for loss, report to the individual claims, to the individual states. And then for personal identity theft, there's a good link here for identitytheft.gov that walks you through what to do if your personal identity has been stolen.
Okay.
So I think we'll skip the questions and go to your.
Yes, I'm gonna jump in with my presentation, but if you have questions, please put them in the chat feature, and then we can take them at the end. I'm going to just touch on a few points, and so you guys know that my law firm does things a lot differently than the traditional law firm, that we're distributive, and that we have a completely different business model. That you also know that we're a full service law firm, and so there's pretty much nothing we can't handle, particularly in the PEO space. Now, I wanted to get back to some liability issues. So if you end up as a PEO being duped by, not a fraudulent client, but say it's a request to withdraw money from a 401k, or a call or email that says, okay, I've changed my bank account for direct deposit, or change my mailing address to send me my, my paycheck, et cetera. You've got obligations both to the client and the worksite employees. And so, some of those things obviously relate to contract indemnity. We talked about the contract earlier, that if you as a PEO create an error or omission, that you need to make sure that that's handled properly. In addition, of course, the obligation to protect your employee information and keep things secure about the employees. If not, you can be negligent for not doing a reasonable diligence in confirming, a change of information or a request you have, or even checking out potentially certain inquiries you might get that might be a red flag. I mean, there's an ongoing scam where a crook gets connected to an executive's email account, and then gets into the calendar and says, oh, he's going to be on an airplane at this point in time and day. So we'll email while he's on a plane saying, oh, issue checks to these employees for bonuses. And there's no way to verify it because he's unavailable. And then the money is sent to, to a bogus location, to bogus individuals, and it's stolen, but the PEO thinks it was genuine because it came from that officer. So if you lack controls, you can be liable. Also, if you end up not paying the people and it goes to some fraudster, it could be a wage and hour violation, because wages are owed in the very next pay period after they're accrued and earned. So then, just one more thing on the check cashing. Jean had an idea that with the putting an endorsement on the check that would put somebody on notice that they'd have to get some kind of confirmation. We don't know if that would hold in every state, but generally speaking, if somebody goes to a check cashing location or a bank or a grocery store and wants to cash a check, they're called a holder in due course, and a holder in due course has no notice of potential fraud on the face of the instrument. If they cash the check and it turns out you stop payment, or it turns out that it's other circumstances, you're liable to have to pay it, even though what the old scam is, the employee claims a lost paycheck, and then you end up issuing a new check to the employee, but then you also end up having to pay that grocer or whoever cashed the check. So you get double whammied, and in most states there's no way around that. So unfortunately, that is one of those pitfalls if you're not savvy. So if there are questions, let's take them now. I'm going to look in the chat here if anyone has sent any. If not, here's my information. I'm on Twitter. I'm on LinkedIn. You can reach me by email. I do have an e-news list. I am going to go update my YouTube channel periodically. And then I want to give you, again, Jean's information, because Jean, of course, has done a terrific job here. And I want you to know how to reach her if you have any questions or concerns.
Yeah, we covered quite a bit. I covered quite a bit. So please feel free to reach out if you have a question on anything that I said, any of the policies or procedures that I mentioned. I'm happy to discuss it further with you.
Yeah, and as always, if you have feedback on how to improve this webinar, or if there is a topic or a subject you want me to cover, I'm happy to do it. I will probably do a follow-up with a forensic expert as another aspect of the payroll fraud upcoming. So look out for that. You'll get an invite. If you're not on my email list and you want to be, because Jean invited you to attend today, but we don't have a relationship, just send me an email and I'll add you. I don't solicit. It's just for your informational purposes. So with that, I don't see any questions. I want to thank everybody for attending. I especially want to thank Jean for her time and effort in presenting this informative and important subject. And like I said, you can watch the rebroadcast if you're inclined, or you can pass this on to others. It should be uploaded within the next day or two. Oh, wait, before we go, we have one question. No, it's a thank you. Okay. Well, thank you very much, everybody. You enjoy the rest of your day and look out for another invite in the future.
Thank you.